Hi, I'm Reid Cramer. I direct our asset building program here at the New America Foundation, and I'm here with Gary Rivlin, author of this book, Broke USA, From Pawn Shops to Poverty, Inc., How the Working Poor Became a Big Business. Important book, very timely book. I'm glad to have you here.
Thank you.
And I often talk in my work about the alternative financial sector, the fringe sector. This is the unregulated portion of the economy where people have been accessing these products that have poor terms and conditions, and sometimes people's eyes glaze over. You've called it Poverty, Inc. What does it mean to you, and how big is it?
So there are all these old line businesses, pawnbrokers, check cashes, rent-own that have just gone Wall Street and have become huge. At the same time, in the last 20, 25 years, we've seen a lot of innovation, subprime credit cards, subprime mortgages, the payday loan. A payday loan is a quick cash advance against your next paycheck. And if you add all of that up, add subprime auto lending, a range of products that are specifically aimed at those of modest means to the working poor, it's over $100 billion in revenues a year. I wrote about the casino industry for the New York Times. The casinos collectively in this country, Indian casinos included, take in about $60 billion, $70 billion in revenue. So we're talking about an industry much larger than the casino business in this country.
And the payday lending industry with these large profit margins almost was created overnight. I think that when we talk about it here in Washington, people feel like this is a problem. It's been with us for a long time. But actually, your book shows fairly recent phenomenon. How did it get started? How did it grow?
Right. So I actually went down to Cleveland, Tennessee, and met with Alan Jones, the inventor of the modern-day payday lending industry. The light bulb went off like, wow, banks charge so much money for a bounced check. These banks charge so much for a late credit card fee that it might make some economic sense for people to pay my $15 or $20 for every 100 I give them. It sounds like a lot, but it's a lot less than a bounced check. And herein in 1993, the idea was born. There was a lot of funding from big banks, Wells Fargo, Bank of America, Wachovia, and this industry grew in a 16-year period from nothing to, by 2006, there were more payday lenders in this country than McDonald's and Burger King's combined. They're making loans of $300, $400, $500. They make $40 billion of these loans a year.
Yeah. I think one of the most important things about your book is it shows the connection between this activity on Main Street and actually how it connected to some of these big financial players, how it connected to Wall Street. And so the crisis that we've just kind of experienced was not, a distinct phenomenon of a Wall Street problem or a Main Street problem. These were actually connected. And of course, we're at a very timely moment here when we've just had the Dodd-Frank Financial Reform Bill passed. We're going to have the creation of a new Consumer Financial Protection Bureau housed in the Federal Reserve. And the challenge of this agency is really to police this this marketplace. What would you put on the top of the agenda for this new bureau?
Well, first, let's just say it's remarkable that we have this bureau. The amount of money that the banks, the payday lenders, the pawnbrokers, the check cashers, all these fringe finance businesses and their allies in the banks who help fund these businesses, they have spent millions and millions of dollars lobbying against this. They hate the idea that there's a new sheriff in town that is going to put the consumer first in a financial transaction rather than the safety and soundness of a bank. A lot of what this agency is going to do is take existing laws and make sure that they're followed. And that is a huge, that sounds simple, right, but that's a huge step forward. But, the million-dollar question in Washington right now is who's going to head this agency and how much power is it going to have? How aggressive is it going to be? It doesn't have the power to cap interest rates and tell the payday lenders, no, you can charge only 36% or whatever figure rather than the 400% annual percentage rate fee they charge. But with that said, they can look at the very notion of a payday loan. Is that an abusive loan? As far as priorities, the payday lending industry is huge, and millions of people each year are just paying thousands of dollars in fees. I would definitely make that a priority. The subprime auto loan business, these lenders In fact, they're often the same person selling you the car is the lender. They're called buy here, pay here lots. They are charging people 20% annual interest rate on a loan, 25% annual interest rate on a loan. They are just charging exorbitant rates and stuffing all sorts of expensive add-ons, credit insurance and a very expensive version of a AAA program. I would also make them a priority.
Yeah. And certainly it is a remarkable time. The new bureau has the ability to kind of oversee this marketplace and take some really important action. And so I really actually want the regulators to read your book, which I've enjoyed immensely. And then I want to come back in a few years and figure out where we've come, where we need to go from here. So thanks for your time. Please return to newamerica.net for more interesting commentary on these and other matters. Thanks, Gary.
Great, thank you.
Yeah.